you everybody for your patience. Now what I'm going to need to do is share my screen. And I'm running off of mobile. So if things go awry, please, someone let me know, or ping Jose on Facebook and he'll come get me. And let's get this slideshow going. So without further ado, we're on to our client training session and trying to understand source deductions. Source deductions, for those of you who aren't familiar with them, are the taxes that are deducted at source by the employer to be remitted to the government on behalf of the employee. And these are in effect the employee's personal taxes, CPP, and EI if necessary that the employer is withholding. For most of our clients, the owner is also the employee, so you're withholding from yourself and remitting to yourself. The reason that we put on this webinar this time of year is because many of our independent contractors pay their salary on an annual basis, and December 31st is the last day in which they can declare salary for the calendar year, and that means that they're going to have to pay taxes on that salary in the first weeks of January. That could be January 3rd, 10th, or 15th. We'll talk about those different thresholds as we get into that a little bit later. But for those of you who are not familiar with who we are, anyone who's watching on Facebook for the first time, or any new clients, CPA4IT is a chartered professional accounting firm specializing in independent contractors. We've been doing that since 1984. My father originally founded the firm under the name Lowell & Associates Professional Corporation. We later merged his firm and my own Born in Cloud business to create CPA4IT, which was an offshoot of a brand my father had used, CA4IT, for many years. We are one of the few ISO 9001 registered firms. For those of you who are familiar with that, that just basically means we've got a bunch of systems and processes, and that those systems and processes are audited by third parties who come in and check to make sure that we're doing what we say we're doing, and that we're constantly and constant and never-ending improvement is the tagline there. So this thing is a little jumpy for me today. So what are payroll source deductions? I've given you the high-level overview. These are the monies withheld by your employer, and they are deducted from your employee's income along with their share of the CPP and EI premiums. These remittances are deemed to have been made on the day in which they are received by the Receiver General. And that's really important because when we talk about the different payment methods, just because you go and make an online payment today doesn't necessarily mean that CRA has received it today. And the penalties on source deductions, which we'll talk about later, are quite significant. They're 10% the minute you're late, and source deductions are probably the largest tax that you're going to pay, as opposed to GST, HST, which is probably the second largest, and then corporate tax, which is usually the smallest of the three taxes that you're going to pay as a corporation. The only way to make these remittances is either, and again, we'll talk about this later, online through your bank or through CRA's portal, a check mailed to CRA, or a payment made at the actual bank. And in order to make a payment at the bank, you do have to have a specific remittance form, PD7A. We'll talk about that again later. But the key thing here is that if you're paying yourself a salary, you need to, as the employer, withhold employment tax, CPP, potentially EI, though most of our clients don't. We'll talk about that later again, and remit that to the government. There are different thresholds for when you have to remit that, but if you are doing salary, you must make a source deduction payment. Now, if you are choosing to make a remuneration to the shareholders through a dividend as opposed to through the form of a salary, then these deadlines, these payroll source deductions are not applicable. I will take one brief minute to explain the difference between salary and dividend. Because I think for those of you who are going to go the dividend route, you probably want to know what the difference is, and you can probably tune out if you're going with dividends. So a dividend is remuneration that is paid to shareholders and is paid out of retained earnings. So retained earnings are the monies that the corporation has earned and paid tax on. So when you're paying a dividend, these are monies that the corporation has paid the corporate tax rate on. It is not employment income. As such, there's no source deduction remittance or payroll deduction required. In addition, there is no CPP applicable to a dividend. On the flip side of that, there's also no room for RRSP that is created. In addition, there are expenses that cannot be applied against dividend income, things like childcare expenses, a few other categories that limit the personal deductions that can be applied against dividend income. But because the corporation has paid corporate taxes on that already, on the personal side, you will get a credit for those taxes that are paid. Now, there is a complicated dividend gross up and dividend tax credit formula that I'm not going to bore you with, because the fundamental principle of that gross up and tax credit is to give you credit over here on the personal side for the taxes that you paid over here on the corporate side. And it's intended that when you integrate these two taxes, the taxes would be the same if you were to pay a salary. So there should be no significant benefit of choosing one method over the other when it comes to tax. Now, where the differences are, as we mentioned, CPP as well as RRSP contribution, those are different factors. So if you don't value CPP, you don't value RRSPs, you may consider a dividend as another option. In addition, because dividends are coming out of retained earnings, they're not an expense deduction to the corporation. Salary, which comes out before the corporation pays tax on it, is a deductible expense to the corporation. So you will pay the full personal tax rate on any salary you pay to yourself. But because you paid the full personal tax rate on that, that's a deductible expense to the corporation and reduces the amount of income on which the corporation will pay tax. So let's say you had $100,000 of revenue and you had $20,000 worth of deductible expenses, not including your own salary, and then another $80,000 of salary you declared for yourself, then 100 minus 20 minus 80 gets you zero. You'd be paying no tax on that. Now, if you did the 80,000 as a dividend, you would have the 100 minus 20. You would pay corporate tax on the 80. Okay, and then in fact, you may not even have the 80 to distribute, because one limiting factor with a dividend is that the corporation actually has to have the retained earnings, the net income on which to pay these dividends. So you would have $80,000 minus the tax on that 80,000. That would be the remainder you would have available to distribute. So long-winded answer there here. The ultimate question, and the reason why most of you are dialing in right now, is to figure out whether you actually need to make a remittance for the 2019 calendar year. And for those of you who are brand new to this, the big question is, do you have any income from other sources? And the reason that's important is because if you have income from other sources, if you were an employee before becoming an independent contractor, you likely have a very large salary already from that former employer. And it's unlikely that we want to give you any additional income, because the whole goal with the corporation is to keep your income as low as possible. Now, you may have withdrawn some money out of your corporation, which we would typically deem to be a loan in that first year. And we won't declare any salary. The salary will come out in 2020. Now, if this is not your first year, the next question is, have you actually already declared income from your corporation for the 2019 year? Even if you haven't processed your 2019 fiscal year end, it is possible that you've declared income from your corporation into 2019. Might be asking, how is that possible? And that's because as a corporation, you are allowed to declare a bonus up to 181 days from your year end, which actually pushes you close to 6 months from your year end date. So if you have a year end date of July or onwards, you can declare income in the 2018 fiscal year that would be deemed payable in the 2019 calendar year. So the question is, did you push any income or defer any income, as we call it, into 2019? And again, if so, how much? So the reason that we ask if so, how much is because we want to look at the different tax thresholds and figure out whether we want to top you up. typically we would want your salary to be at least $45,000 because that's the top end of the lowest tax bracket. We might even want to go higher depending upon your total revenue that you are earning. If you're a very high income earner, it's unlikely that you're going to want to stay at the lowest tax bracket. You might want to go up higher into the second tax bracket. So those are the key pieces of information to determine whether you need to make a remittance for 2019. Because if you already have large sources of income already into 2019, it is unlikely that you want to top that up and increase your salary. Because as we know with personal taxes, the more we take in personal income, the higher the tax rate that we pay. Now, it's only a higher rate on the amounts in those different tax brackets, but you are paying a higher tax rate whenever you move up. So we want to ideally keep it as balanced as possible for as long as possible and as low as possible, as low as possible. So I'm tripping over my words here. And I'm going to give you some more details on calculating a remittance amount. And in fact, we're going to send you a form, which I'll show you in a second, to help you calculate how much you should deem for your remittance. So we're going to send you a form. In fact, it's been sent to you already if you're a client of ours. Many of you may not get it because we've actually already determined that we've maxed out your 2019 source deduction remittance, so there's nothing to do, no planning required. However, if you receive that email, you'll get a link to a spreadsheet that's going to ask you some key questions. How much money have you withdrawn from your corporate year end? This is a limiting factor for us in tax planning because while we've got some flexibility in calling some of it loans and deferring it into other years, generally speaking, the amount of money you take out of your corporation is the amount of money that we're going to declare for you as salary. Now, we also want to know if you've contributed anything to RSPs because that might change our tax planning strategy. As I said, if we're targeting a $45,000 target net income, that would be the target net income, not the target gross. So if you made, let's say, $20,000 in RSP contributions, you wouldn't want your target income to be 45 because 45 minus 20 would be 25,000, and you'd be in the absolute lowest tax bracket and using RSP at the lowest tax bracket, which is not a very effective tax strategy. So we'd really want to make sure that we're looking at optimizing that. So we need to know how much money you have already or plan to remit for the 2019 year. It's also helpful to know if you have a specific targeted net income. There's lots of situations where you might want to target a specific income that's, above certain tax brackets. Like if you're buying a home or planning to buy a home and your banker has said that in order to qualify, we need you to have income at a certain level, usually averaged over 2 years. We might be targeting a higher net income, or you might say, I really do want to keep it at the lowest tax bracket. So that is helpful for us to know. And then lastly, do you have any family members that we can do any income splitting with? Do you have a spouse with no income? Do you have children with no income? Have they contributed to the business? Can we look at doing some income splitting? So again, that form is going to pinpoint those questions. I'm going to jump over there just for a second to show you what that form looks like. So this is the form. It should come pre-populated with your company name and email. We do like you to let us know whether you're going to be preparing your own T4 or T5, or whether you'd like us to do it, or whether it's just not required at all. These questions we talked about: how much money did your business earn? How much did you spend on business-related expenses? These are those key questions that are going to help us figure out the amount of money we need to remunerate. And then some personal details around the RSP contributions, contribution limits, things around your spouse, same sort of information, and then family details as well. So that information will really help us pinpoint what we want your salary to be, so that we can do the optimum tax planning for you. Now, this is where we start to get a little bit more complicated because there are different types of remitters, and different types of remitters have different payment deadlines. So figuring out which remitter type you are is a little bit complicated. I'm going to walk you through exactly how that is done. But what I can tell you is we now make all our remittance due dates. We tell all of our clients to pay based on January or the third day of the following month in which you made your payroll, which is the earliest it could be to avoid any possible ramifications. Your deadline may be in fact later than that. And in fact, many clients get these documents from the government saying that their threshold has changed and they don't understand what that is. So if you've got something from the government saying your employer threshold has changed to a regular remitter or a type 2, this is just simply changing that date, but we're going to give you deadlines based on the worst possible scenario anyways, so you can virtually ignore those. If the deadline does happen to fall on a Saturday or a Sunday or a holiday, it's due on the next business day. Now, as we said earlier, it's considered paid the day they receive it, not the day you make the payment. That's really important for online payments. If your business does go bankrupt, you must remit a little bit sooner. Hopefully that's not applicable for anyone. And then next is how do we figure out what type of remitter you are? And it's based on something they call the AMWA, or the average monthly withholding amount. However, one key piece of information is that's from 2 calendar years ago. So it's not from last year, it's from what it was 2 years ago. Now, there are different types. There's a regular remitter, a threshold 1, a threshold 2, a quarterly remitter, and then associated corporations. So let's start with the basic, a regular remitter. So this is where your average monthly withholding amount is less than $15,000, or it's within your first 2 years of operations, in which case they cannot calculate an average monthly withholding amount. So in that situation, the due date is actually going to be the 15th of the following month in which you make your remittance. Assuming December 31st is the last day we can make a payroll remittance, a payroll payment, then your remittance would be due by the 15th of January. Now, threshold 2, which is the most common category, is between $15,000 to $49,999, so under $50,000. If your average monthly withholding amount, which again is really easy to calculate because again most of our clients pay once a year, not every month. So it's what was the payment 2 years ago. If it's between 15,000 and 15,000 and under $50,000, then it'll be due by the 10th. Or threshold 2, if it's over $50,000, it's due on the 3rd. Again, all of our deadlines are going to be based on the 3rd, so there's nothing really to worry about there. Come on. A quarterly remitter, now this is interesting. Technically not applicable for our clients, although you might get a notification that says that you've been moved to a quarterly remitter. If your average monthly withholding amount is less than $3,000 and you meet certain eligible criteria, you can qualify for the quarterly remitter. Because most of our clients are only paying a salary once a year, they're only actually making a payment on payroll once a year. Most employers where you have an employee that you're paying every 2 weeks needs to make a payroll remittance every single month based on that payroll. So a quarterly remitter would be helpful for those people who are paying small amounts to people on a monthly basis. So again, for our clients, not really applicable because moving from monthly to quarterly doesn't help us because we only pay once a year anyways. Another thing that's important to know and understand is associated corporations. The key here is that if you have multiple companies, it's the combined average monthly withholding amount of the corporations. So if you have a bunch of holding companies and you're doing remunerations or different operating companies, if you have any related and associated companies, you have to look at what the average monthly withholding amount is for those combined companies to determine whether you're a threshold 2, threshold 1, or regular remitter. So a new remitter is going to be a regular remitter, as we mentioned earlier. So what we do on the 15th. New employees do need to have a business number, obviously, and register for a payroll account number. However, if you have not registered for a payroll account number, which is your business number followed by RP, typically 0001, one will be created the minute you make a payroll remittance. So if you go online to your bank or to CRA and make a payroll remittance, the payroll account number will be created for you automatically. However, if you wish to go to a bank, you need to have a PD7A form, which requires you to have a payroll account number, which means you've got to call CRA or go online and create a payroll account number. As I said, new employers are considered regular remitters, so your deadline is the 15th. And as I just said, CRA will send you a remittance form once you register. Now, when we incorporate new companies, we do not automatically register them for payroll because it's not uncommon for our clients in their first year to not need any payroll remittances. And we don't want CRA crawling up your back asking you to make payroll remittances that aren't due. So we don't by default create the payroll account number, although it can be done with a very quick phone call to CRA or be done through your CRA online My Business account. Now, remittance amounts. This slide looks as old as some of the payment methods that we have listed up there. Paying by email or paying by mail, paying by ATM, probably the old school ways. Most people pay electronically these days. Typically done through the bank is the best option, simply because if you do it through your bank, there's usually not payment limit amounts as much as there are with CRA's site. CRA's site is effectively using e-transfer. So whatever your Interac limits are going to be a limit for paying through the CRA online payments portal. But typically when you pay through your bank, it's like paying a bill, and usually there's no limit in the amount that you have to pay or can pay on that. So you will need your payroll account number. If you haven't set up a payroll account number, it's going to be your business number followed by RP0001. If you enter that into an online payment, it will automatically create a payroll account number, as I mentioned to you before. If you do want to go to your bank and pay in person, which is typically done when you're last minute and you need to make a payment today that will be considered paid today, the only way right now to do that is at your financial institution, where they will stamp it as paid that day. And you will actually need the PD7A form, which is a form that we cannot provide to you. It is provided by CRA and has your specific payroll account number, and it is sent to you by snail mail. So if you want to do that by January 3rd, you should be creating your payroll account now if this is your first year of operations. However, like I said, most people will do that online. And then again, the big caveat here is if you are making an online payment, typically you'll make a payment today and it'll be scheduled to be paid tomorrow. So, and if that's on a weekend, it'll be scheduled to be paid on Monday. So keep that in mind. So if you try to go in on January 3rd to make a payment due January 3rd, it actually probably won't process until January 4th. And you could potentially be looking at a late penalty if you are a threshold too. The remittance form, I've sort of covered this one already. It's called the PD7A. It is specific to you. CRA sends it to you. There's some information to fill in on the bottom of that form. It basically asks you for what the gross payroll is, how many employees there are, and what the total remittance is that you're going to pay. When we do provide you the tax planning, that will be available on the worksheet. So we give you a worksheet, an Excel spreadsheet where we do the calculations, and one of the tabs is the payroll remittance amount, and that gives you all the information that you need to complete that PD7A form. And of course, it is also the same form or the same information anyways that you'll need to provide when you're making a payment online through CRA's portal. So if you have any questions on that, feel free to post them in the chat. I'll check that in a second. I know I haven't been looking at the chat as we've been going through. I apologize. I've just got the one screen going. If you're not making a remittance or don't have any payroll, it is helpful to notify CRA. You can fill in the PD7A and tell them you have no employees with any eligible remittances until such a time, which might be next December, whatever the case might be. You can do that online through your My Business account. You can give them a call and let them know, or you can snail mail the PD7A form to let them know you have no employees with any eligible remittances. If you're confused by that, again, reach out to your account manager. It's a fairly straightforward process for us, but it is important if you're not going to be making a remittance and you made remittances in the past to notify CRA. If you've never made a remittance in the past, don't worry about notifying CRA. You're not on the radar. If you had made a remittance in the past and you don't make one now, you're likely to get a letter from CRA saying, hey, why haven't you paid your source deductions? So to keep them happy and to keep them out of your hair, it's advised to fill that in. So another common question that we get is, how do you correct payroll remitting errors? So you could have maybe overpaid or underpaid your payroll remittance. Maybe your tax planning has changed. Maybe you didn't have the funds available, whatever the case might be. Those two issues are basically resolved the same way. We record on your T4 that we'll prepare in February whatever remittance you have made. That might be an under remittance or an over remittance, as we've talked about. So let's say that you have, $100,000 salary and you've only made a $10,000 remittance. Obviously, that's not enough. And likewise, if you made, an $80,000 remittance, you would have remitted too much. These are some extreme examples to illustrate the point. When we prepare your T4, we say that the salary is 100 and the remittance is $80,000. And when you go to file your personal tax return, the government looks at how much your employer has remitted on your behalf, how much you actually owed, and then you as an individual filing get back the remittance that was over remitted, or if you've under remitted, you have to pay the difference in tax when you file your tax return in April. Now, there is a caveat to this. If you under remit to the point where you have not covered all of the CPP required, there will be a penalty. The employer is allowed to not withhold taxes, but they must withhold and remit CPP. The reason that is there are lots of reasons why you might have other deductions that could reduce the amount of taxes that you would pay. And so therefore you can have your employer not withhold the taxes. And then you as the employee are required to remit those when you file your tax return in April. However, there is no excuse and no reason you would never not owe for CPP. Well, actually, that's not entirely true. You could have maxed out with another employer. But either way, the rules basically say the employer must withhold and remit CPP, even if there is another employer who's already paid the maximum CPP amount. So that's important to know and understand. The last thing I have here is a misapplied payment. And this can be applicable whether you've under remitted or over remitted. So your remittance could have just gone to the wrong place. Maybe it went to corporate taxes. Maybe it went to GST. Maybe it went to your personal. The only way this can be corrected is by informing CRA that the payment has been applied to the wrong payment type, which would be GST instead of payroll, or the wrong period, which is actually more common. Like maybe it went to 2020 instead of 2019. The way to correct that is to either call CRA and have that applied to the right period and the right tax account, or to do that same process through their online portal. Again, if you fear this has happened, let us know and we will get it resolved for you. If you get a notification that you haven't made a payment and you know that you have, let us know that likely cause is a misapplied payment. So we can look into that and get that sorted for you. As I mentioned earlier, the failure to deduct penalty is significant. I mentioned earlier a 10% late penalty for being 1 day late. It's even 1 minute or 1 hour late. So if you're late with your CRA payroll source deductions, they do apply very significant penalties on that. And that is because from the government's perspective, this isn't your money. It's your employee's money. You're withholding it and remitting it. CRA doesn't ultimately care that you are both the employer and the employee. They just want those taxes remitted in a timely fashion so that there's not any issues. In addition, if you fail to remit the required amount more than once, CRA could apply a penalty of up to 20% on the second late penalty. So consistent late penalties increase the amount of penalty that you'll pay. So it's a minimum of 10% the minute you're late and could go as high as 20%. So quite significant penalties that there's no reason you should ever have to pay. Now we've gone through a lot right now, and I'm just going to see if we can open it up to see if any questions have come along the way. So bear with me 1 second. So no Q&As yet. If anyone has any questions about the payroll remitting process, let me know. Otherwise, I think we're probably wrapped up for the day. And it looks like we may not have even gone live onto Facebook. Oh no, we're still good. We did stream live. Woohoo! Okay, I stopped the stream on Facebook. I'll check there in a